Well, after months of the stock market going lower, we finally had some good gains this week, particularly on Friday. So does that mean the stock market crash is over? I'm going to answer that question and show you what stocks to buy and when to buy them, how to know what to do. We'll also look at the sectors of the market that I follow each week, and we're going to look at the day trade of the week on BNTC. All right, so let's take a look at the overall market, starting off with the S&P 500. Now, I will get into whether this stock market crash is over and what sectors to look at and how to analyze them so that you will know where to take advantage of opportunities. But let's begin with just a sense of what's going on in the market overall. So we'll start off with the S&P 500 chart. And you can see here we've got a daily chart of the SPY, which is the ETF that represents the S&P 500. And notice that we are still in a downward trend. As I talked about last week, we were very oversold and likely to bounce back up toward that downward trend line. And that's exactly what happened this week. We had big gains on Friday. However, we have not yet broken that downward trend line. Our sentiment stock score is still quite low because there's no rising bottoms building on this chart. We only have falling tops and falling bottoms. So the sellers are still in control in the longer term. Now in the short term, if we jump to the 15-day chart, actually let's make it the 1-month chart, and we'll make this a 60-minute. What you can see is that we broke this very steep downward trend line. We built a rising bottom and we broke out. So if you were a swing trader or a day trader, there's a little opportunity here to make some long trades, some trades on the long side for the market to bounce back. But we should not confuse that with a long-term reversal just yet because the overall market is still in a downward trend. Let's take a look at the NASDAQ and see if there's anything different there. Symbol for that is QQQ. And you can see very similar situation. The downward trend is still intact. We don't have rising bottoms. We're essentially rising up to the downward trend line. What is likely to happen next week is we'll get stuck at the downward trend line, pull back, and then if we can make a rising bottom and break the downward trend line from a rising bottom, then we've got a little bit more of a positive situation. We can see the negative momentum turning. If instead we hit that downward trend line, roll over, and go to new lows, well, then the sellers remain in control. So I still want you to be cautious with the NASDAQ stocks as well. Well, how about the small caps in the US? IWM is the ETF that represents those, and it's a similar picture. You're in a downward trend line, below the downward trend line. We were oversold because we're far below the downward trend line, and now we just work our way back up to it. So in the next few days, I think probably strength, but in the next few weeks, we don't have conclusive evidence that the market is going to turn. We need that build of a rising bottom and then breaking that downward trend line. Now, what about if we go into the chart of the Canadian market, T.XIU, and here it is. There's your downward trend line for the Canadian stocks. Look at how far below the trend line we are. We are heavily oversold, and unlike the US markets, we did not see the bounce back there, and that's largely because energy has not yet started a comeback from weakness. I'm going to talk more about energy later in the video, so stick around for that. So I do think that the Canadian market is oversold and likely to come back a little bit in the short term, but it needs to break that downward trend line. I know I sound like a broken record, but that's really key. All right, let's take a look at some of the commodities. We'll start with oil, and here you can see the oil chart has got an upward trend line coming across these bottoms like that. And look at that, we were overbought, and now we've come back to the trend line, which is what you expect, and we're stalling at the trend line. So what we should expect to happen is we should bounce off of this, and then the question is, can we move to new highs, or are we going to make a falling top and break the upward trend line? So the picture here on the oil market is that it's still in a bull trend. It's at a very critical point because it's right at the trend line. If we break down through the trend line, that's bad. If we bounce off of it, then that's good. And I'll, again, talk more about that later in the video. How about gold, GLD? And you can see here, Gold is on the daily chart, has falling tops, and so the sellers are in control. It has pretty good support right here. We haven't broken down through that, but until we can break this cycle of falling tops, which is pessimism, we shouldn't get too excited. Now, in the grand scheme of things, it's basically been going sideways all year. We had a little surge here, and then we came right back into the range. And so it's actually overperformed or performed better than much of the stock market in general, because it hasn't lost, but it's also not gaining anything, and it doesn't look particularly strong. All right, how about currencies? Take a look at UUP, which is our US dollar, and it remains in a bullish trend. Okay, so here you've got your bullish trend right there. You are coming off of a high, you're pulling back to the trend line. What we expect to happen is bounce off of the trend line and continue higher. Notice the stock score is 76. That's because the buyers are in control. There are rising bottoms on the chart. However, let's take a look at another currency, a cryptocurrency. And for that, I use GBTC, which represents Bitcoin. And look at the opposite picture here. The sellers are in control, and they've been in control for a long time. The sellers have been in control for a long time. We had a little bit of strength at the end of the week, and that probably will get some cryptocurrency people excited, but in the grand picture here, we're still in a downward trend, and I think it still remains more likely to go lower than higher. All right, now I want to talk about where to buy, what to look for, what sectors have promise. And we're going to compare and contrast two sectors, the energy sector and the technology sector. So let me jump into some charts that I've prepared here. And you can see this first chart is of XLK, which is the technology sector spider. It's an exchange traded fund. It's not leveraged. It represents the technology sector. So companies like Apple would be in this. All right, so we had an upward trend, and we broke the upward trend back in January. That was our signal to sell. All right, and since that time, we have been in a downward trend. And notice that we're still in the downward trend. Despite the strength this week, we haven't broken the downward trend line. Notice we had other weeks there with strength. About a month ago, we had some strength. About 3 months ago, we had some strength. But until you can break that downward trend line, until you can break the cycle of seller control by starting to build rising bottoms, you should generally avoid these stocks if you are an investor. Now, as a day trader, there was good opportunities because on the short-term time frame, the thing that day traders focus on, like a 2-minute chart, for example, there were rising bottoms. There was breaks of downward trend lines on the very short-term charts. But if you're an investor looking to buy a stock to hold for months or years, it is not yet the time. All right, now let's compare this sector to the energy sector. And for that, I use the Canadian Energy ETF. Symbol is T.XEG. And notice that the upward trend line is still in place. We've had weakness for the last 2 weeks, but all that has done is brought it back to the upward trend line. The buyers in the long term are still in control. The sellers are in control of the technology sector. The buyers are in control of the energy sector. And what you're getting is perhaps an opportunity to be a buyer of energy stocks on weakness. They've gone down for 2 weeks. They're coming to where the upward momentum should hold them, and there's a good chance they're going to move higher in the next little while. Now, I said good chance. That means it's far from certain. So what you have to do is watch for a confirming signal. And I like to watch the shorter term time frame to tell me when to take the trade. So the long-term time frame here, the weekly chart, tells us to look for a buy opportunity. The short-term chart is going to tell us when to do so. So if we jump into the next screen here, this is the energy ETF, same one, on a 30-day, 60-minute chart. So it's much shorter time frame. Here's our downward trend line. And notice we've started to build a rising bottom here. And all we need to do now is break this downward trend line. If the market can break the downward trend line from a rising bottom, which we've started to build, then we'd have a signal to go and look for buying opportunities in energy stocks. Hasn't happened yet. It could still go down lower for another week. But when it breaks that downward trend line on this intraday chart, you can use a 60-minute or maybe even a 30-minute chart, look for that break of a downward trend line from a rising bottom. and use that as an opportunity to go look for buys in the energy sector. Now, let's talk about the technology sector. Because the technology sector broke its upward trend line on the weekly chart, the sellers are in control. So you need a much stronger signal to be a buyer. And so in this case, we're going to look at a shorter term time frame, but we're going to look at the daily chart instead of the intraday chart. So the chart that I have here on screen is a daily chart of the XLK, which again is the technology sector ETF. Notice on the daily time frame, we're still below the trend line. We have no rising bottom. So what we need to do for technology stocks to be a buy is build a rising bottom on the daily chart and break the downward trend line. Hasn't happened yet. That's what I want you to watch for. And of course, I'll do the watching for you as well. Just make sure you're subscribed to the channel. Every week I do these videos. They're free. You'll get the story from me each Sunday morning. All right. So that's a little, a lesson on how to read charts, how to look for reversals. But comparing a stock market sector that's still in a long-term upward trend, the energy sector, versus a sector that is in a downward trend, the technology sector. You play them very differently because of that longer term trend. All right, well, let's get my ratings out here then. I've raised my rating on US stocks from bearish to neutral in the short term because we are starting to build some rising bottoms in the short term, but the long-term picture is still bearish. On Canadian stocks, bearish on both time frames. Gold, neutral on both time frames. Oil, long-term bullish, short-term neutral. It needs to turn right at this trend line where it's at right now. US dollar, long-term bullish, but short-term neutral. Looks like it could pull back a bit. And Bitcoin, bearish long-term, neutral short-term. It did try to have a little bit of stability this week. It hasn't really broken any downward trend lines yet, but it's something to watch for. All right, well, let's now talk about the day trade of the week. Of course, some of you may be long-term investors, and the first part of the video was for you. For those who like to day trade, here's something that we were following on my active live service on Stockscores.com this Friday. And this is a stock that came alive with some abnormal activity right from the start of the day. We have algorithms that look for that, so we find these things very early in the first part of the day here. And then we look for entry points. And there's two possible entry points on what I call a pullback play on this stock. The first one was right here, and your stop loss would be at about $1.04. So it actually almost got stopped out. The second one, and we'll use a different color for this, the entry point was here, and the stop loss would be about there. Now notice that this space is half as big as this space. And so even though it's the same stock, because the volatility compressed more on the second signal, you get a better reward for risk potential. So let me explain what I mean by that. If we now go with this trade, let's say we buy at $1.35, our stop is $1.04, and let's say we sell up here when the upward trend line gets broken, and that would be at about one RR gain, okay? So we're buying at $1.35, stop at about $1.05. So in that case, we're gonna buy, let's say 300 shares, and it's gonna cost us not a lot of capital, like 300 times $1.35. So let's call it $400 of capital. You can't margin this stock because it is too cheap. And it earned about 1 RR on that trade. So you made $100 profit for every $100 of risk. $400 of capital, still a 25% return on your capital. Not too bad. All right, what if we take that second entry? So let's erase all this now and draw again. So our entry point on our second entry, I'll draw this in yellow, is right here, and that's at about $1.25. And we'll, just for simplicity, say that our stop loss point is at $1.15. So in this case, we've got 10 cents a share in risk. So instead of only buying 300 shares for the same amount of risk now, because we're buying it a little later with less volatility, we can actually buy 1,000 shares. We can buy 3 times as many shares. That's going to cost us $1,250. We can't margin it. And the RR in that case, if I just draw out the multiples here, there's a reward for risk of 1, and of 2, and of 3, and your exit would be right around here. Just for simplicity, let's say it's a 2 RR move. So that 2RR move basically doubled our profit. I'm trying to draw this in blue here. Okay, so we had a 2RR move, which was a $200 profit on $1,000 of capital. It's only a 20% return, but it's double the reward for the risk we took. So because we bought more shares, you end up making more. And that sometimes happens. Later entries can sometimes give you better economics. You can earn more profit for the same amount of risk. And that's an important lesson, something that I teach in the Stockscores Active Trader course, which is available at stockscores.com. All right, do you think the market's bounced here? We had pretty good gains this week. Tell me what you think in the comments. Hope you've enjoyed this week's video. Please subscribe to the channel. It helps me get lots of viewers, and the more we get, the better content I can produce. Hope you've enjoyed this week's video, and as always, trade well.